I was talking about, gather your data up. Know your cost of everything you're doing, what that neighborhood's doing, what that market's doing over there, so you can prove. Also, you want to analyze. You don't want to borrow money from the bank or invest in a project and do a hard money loan and rehab a house, and now you've got 120 in it, and it's only worth 120 or 130, and you thought it was going to be worth 150. Well, it's up to you to make up the difference. Say, well, you're saying, well, I've got 120 in it, it's worth 120. Well, you're still going to lose money. You're going to have to pay a realtor 6%. You're going to have to pay your closing cost, and you've got other money in there that you've borrowed that money. So you can lose. You can sell something what you got in, easily lose $10,000.
Frank, we've got a couple questions.
All right.
Do you lend in Virginia?
Yes.
Excellent.
Yep. About the only states that most brokers stay away from, and I guess it's because of some kind of laws, is North and South Dakota, and Vermont is another one. There's a few other ones there, but I don't think anybody in here is going to do anything in South Dakota or North Dakota or Vermont, I hope.
Mm-mm.
And
Yep.
What other questions do we have?
From Dr. Gale, let's see. At what point, given privacy laws, can a potential purchaser examine the tenant's personal information, credit reports, etc.?
Well, I'm not going to give legal advice, and I would talk to a property manager or an attorney. But I mean, if you, my opinion, and I'm not a legal person, and maybe I didn't understand the question, but if you're the actual owner of the property, I think you have the perfect right to take an application and have a background check on someone.
Mm-hmm.
And if you are purchasing a property which has tenants in place, they should already have those on file.
Yes.
And so I'm not going to touch that one any further, because that's kind of a sort of a quasi legal question. But yes, you should have, when you're examining a property, I would make sure that they had at least a rent roll showing a payment history for that person, and they had conducted some kind of a credit check or a background check or something on those tenants. I mean, if you've got a tenant in there, and you'll see this a lot, especially like your Section 8. And a lot of people think, Section 8, you lower bunch of people, but it's not. There's a long wait list on that Section 8.
It is.
And once those people get in there, it's my understanding, if they lose that entitlement, they're done for life.
Yep.
So they're not going to let any criminal activity go on in their house the best they can. They're going to pay their rent. It's my understanding that Section 8 is actually a great tenant.
It is a great tenant. Well, everybody varies, but I've had Section 8 tenants in my property for 30 years.
Yes.
Love it. Love them. But you have to do your due diligence before you, let them in, like you do due diligence on any other person.
Yep. That's, I guess, and you kind of helped me along there. The point I was going. I mean, if you're looking at a house that's a Section 8 and they've been in there like Adamma's renter for 30 years, I don't think you got anything to worry about. Mm-hmm. If you want to dig down enough to get a crime report for that address, and you see, nothing's went on there, and even maybe once or twice, but nothing's really went on there crime wise, they're paying the rent. I mean, they just have to pay a small portion, and I think your government guarantees they send you a check. And I mean, if you got a tenant like that versus what I was talking about a while ago, you're looking at a 50 or 100 unit apartment or 30 unit apartment, and things been sitting vacant, and all of a sudden it got turned around in the last 6 months. Then that's when I would start digging in and find out how come all of a sudden, well, this maybe apartment building that's maybe dilapidated, or was it performing, and people didn't want to move here. Now all of a sudden everybody wants to move here. What has caused that? So that's when I would dig into the real hard and get that, what I call the trailing 12. I would get every record I could get to find
You
out.
said the trailing 12?
Yeah, it's called a T12. It's called a trailing 12, which is a financial statement for the last 12 months.
Mm-hmm.
And like I said, I would pull those. I would pull that rent roll, and I would pull every file of all the tenants in there. I would double down and check that thing out hard. If you don't, you'll be holding somebody else's problems.
Mm-hmm.
And so let's see what else we're talking about. I think I touched on this risk versus the rewards there, I guess maybe one example of the trailer park I was talking about, or do you want to invest your money in something like that looks real great, but is the rewards worth it? And the banks look at it the same way that you, they're like, is this person stable enough? Is our risk worth the reward we're going to get out of it there? One good thing about real estate versus what I was talking about while going to the stock market, like I just bought $1,500 worth of the stock this week. Well, if it's worth $1,500 today, that's what I've got in it. If it's worth $1,800 next week, I've got 15 in it. But basically, I bought the stock at value. There's no getting a discount on the stock. Whereas in real estate, you can go in there, and leverage means you can put just a small portion of the money up front and then let that real estate work for you, whether that's a fix and the flip or holding that property for a long, long time and letting that property appreciate. And so that's leverage. Yeah, you don't have to pay a dollar. You don't have to pay cash for real estate is what I'm saying. You can use other people's money or just a portion of the money you need and finance the rest. I know some of us probably listen to Dave Ramsey. I guess Dave Ramsey is good with personal finance, but I don't think he understands business. You can't, in my opinion, you can't go out and buy a portfolio real estate. The average person can't go pay cash for a portfolio real estate. You can pay a portion of that down and control that, and then get your appreciation. Hard money I'm talking about here. Hard money is basically means it's based on the asset more than it is the borrower. And a lot of people use it interchangeably called a bridge loan, but a bridge loan is actually not hard money. Bridge loan is like, and I think it happens more in commercial, like you're going to buy, say, the Bank of America building downtown, and investors going to buy it and they're going to pay $50 million, but they're not going to have their money till the end of June, but they need to close on it today. So a bridge loan would come in there and give them the loan from today till June. It's basically a hard money loan, but it's a different purpose loan, if that makes sense to you. Mm-hmm. Any more questions before we move on?
Yeah, I've got a new message. Let's see, what is it? Do you lend to purchase land?
That's a hard one. I haven't done any land loans, to tell you the truth. Now, I did have a commercial piece that a realtor brought me here a while back, and I have a hedge fund that does big stuff, and they would only do 50%. Land is a tough one. Mm-hmm. Okay. I could look at it for you, but I wouldn't. The resources I have, I'm not too sure that I would have any luck. Any other questions?
At the end, I'd like for you to go over your C's, your list of C's, because I did not have the recording going when you were going over that in the beginning. So
yeah,
I apologize.
That's all right. So yeah, this was in the folder last week when I gave it out, or last month. And like I say, this month I'm gonna give out some more folders again. I'll have some more information to put in there. But this was in there. So and we're kind of redundant here. We're going back over what I taught to start with. So what do you need to get along? You know, your documents, first thing you're probably gonna need, and you're not gonna need all of this, but be expected to give it all. Sometime down the road, you're probably gonna need a photo ID. You're gonna be the last, I have 3, sometimes it's 2 months, and it could be 6 months, but be prepared to give your bank statements. If you're doing it, if you're working as an LLC, as a corporation, I would just be prepared to give both. The last 2 years of your tax returns, a credit and information release form you'll probably need, because they'll be digging up some stuff there, and they'll basically need your permission maybe to get some stuff. Personal financial statement, need that right there. A tri-merge credit report with the score. Usually the lender doesn't pull that, or they may, but I always tell people just go ahead and get yourself a tri-merge credit report with a score. Go to Equifax or Experian, and don't go to Credit Karma or freecreditreport.com. Those I'm not going to say they're worthless, but when it comes to the lending world, I would use one of the Equifax. Basically, out of Atlanta, they're the bigger ones here, or Experian there. Already went over this form. I always usually have your investor questionnaire. If you're buying a property, you're kind of guessing, and we've got some good insurance guys there. As far as I know, in the Metrolina REIA, I would just call an insurance company and say, hey, I'm thinking about buying this property. Can you give me an idea of what the insurance is? Because they're going to want to know what the insurance cost is and all the numbers. You probably want to know how much the taxes are on the property each year. The closing attorney here we're going to use to close, and sometimes a lender may tell you that you have to use our attorney, but if not, if you have your own, say here's my attorney, and I would actually get the paralegal's number and get her fax number, or maybe not a fax number these days, but get her email number and her extension, because the paralegal builds the file. The attorney's just, he collects the big bucks and comes in there and slides the papers, but the paralegal does all the work. So, and it's good also once you get going, if you have an attorney and you get to know that paralegal. I know I closed on a house here a while back, and I ran the numbers, and when I got to closing, well, I already kind of knew the numbers, but I'm like, I'm $530 off, but I forgot I've gotten a home warranty. But if you call that paralegal and you haven't done a few deals, they'll say, here's your document recording fees and your stamps, and your title abstract's going to run you this, and the attorney's going to charge you this, a title policy that, and you'll be within a few $100s. They can give you a quote. And it's not any trouble to them. They've got that program running all the time in front of them, and they'll take them about, they can just about tell you what it is quicker than you can give them the numbers. So it's good to have a good relationship with a good attorney and the paralegal there. Well, it's going back to what I said a while ago about the have somebody on your team. That's a good one to have on your team, a good closing attorney. Most lenders want you to have an LLC, I guess, because it makes it easier to foreclose on than it does if you're doing it personally. So be prepared to have your LLC docs, your whatever you file with there, your organizational documents and proof of LLC. They may want to see that, maybe not. Like I say, I tell everybody, expect everything I'm telling you and a whole lot more. I have a copy of your purchase contract or your agreement there. Any other supporting documents you may have, such as a BPO or the CMA we talked about, if you remember what that stands for. Anything that's going to help me build a good case for you there. A list of any other properties you have, and kind of an idea of what kind of money they're bringing in, what the expenses are there. An IRA and your 401k balances, brokerage accounts, anything you have that's an asset, kind of have an idea of what it's worth there. Of course, a boat or an airplane may not be an asset if you got one of those, but financial stuff there. like I tell people, other things will come up. There'll be more questions. Sometimes you think, what else do they want? But yep, it's just got to play along with the game for a while. And once you've done several deals, especially with the same lender, they've already kind of built a file on you. They may want a quick little update, but if you've done 2 or 3 transactions with someone, they pretty well know you, know them, they know you. They're not going to make you jump through as many hoops as they do the first time there. If you've gotten a home loan before, you filled out a form. It's called a 1003. If you remember, it's a long 4 or 5 page form. That's also sometimes called an application. In the commercial world, they may ask you to fill out one of those. Basically the same thing. It's not too hard. If we get to that point, you're doing business with me, I'll walk you through it. And I think I've got one. It's a PDF fillable thing there. You can just do it yourself. I can help you on the telephone there. So the biggest thing is I always say to people is cooperate with me. If you want to hurry up and get a loan and I call you and you ask for, I ask you, that they need this document or they need a copy of this deed, and 3 days later, I haven't heard from you. You're not hurting me, you're hurting yourself. Just like I was talking about the deal in Greenville, the guy, we had cooperation and communication, and I figured out where he was going. And he helped me get some documents there and had the already had the lease signed. That made things go a whole lot smoother than it would have if we'd had to done those 2 closings. So I think cooperation and communication are 2 of the biggest things there. I got my little dog snoring over here behind me. I'm glad y'all can't hear. So I'll go over this again in case I missed part of it. You may see some reflections on my glasses there.
I've got a question. I'm sorry.
I just saw it pop up. What did they ask?
What is the typical interest rate on a hard money loan? Do you lend for 12 months? And how quickly can you close on a hard money loan in Virginia?
I'm going to say about 2 weeks to 3 weeks. It just, again, it goes back to how long it takes to get everything up and the process done. A hard money loan, I'm going to say, I tell people just count on 12%. There's some money out there for 9.9, some cheaper. And I'm not disparaging. They're good people, and sometimes I can cooperate with Wendy and those over at Carolina Hard Money. I think she's 13.75%. But I like using the figure 12%. That's pretty well about standard. And then, like I said, it goes back to if you've done one deal, you may be at 12 or 13%. You do your third deal, it may start dropping to 10%. And the fourth deal, the more deals you do, and the less perceived risk. Lending's built based on perceived risk. A lot of it is. They're like, we've got extra money sitting around. This is a good person. We've already done 5 deals. We've done 6 deals. They give you a little break on the fees a little bit, and a little bit of break on the interest rate sometimes. But if you're starting out, I'm going to say 12 to 13. That's not set in stone. It may be better. It may be worse, but I like to say 12%.
Mm-hmm.
And the lender usually charges 2 to 3 points. And I'm not too greedy. I usually charge one point for my part.
Okay.
And in fact, I'll tell you something a lot of other lenders won't tell you, and it's not too much on hard money. It can be on more of a long term. There's a thing called YSP, yield spread premium. And sometimes the lender will say, if you want to make an extra point on this loan, we can adjust the interest rate up. Usually it's 0.375 or 0.5 or something like that. So, if you come to me and you say, I'm not paying these points up front, but I don't mind paying a higher interest rate. And I can work it out to where the lender pays those points. That's not going to happen on a hard money loan very rarely ever. Whatever you see up front is, usually 1 point for me. But I do have a minimum fee of $1,000. And you might say, well, you're not doing anything but taking an application, shuffling some papers, and the lenders give me the answer back and you collect the check. But if you sit in my seat, there's a whole lot more to it than that right there. And then if you've done a few deals with me, I may reduce that if you've got a small deal. And that's another point I want to make. You might think, I've only got a little $30,000 house that needs $30,000 rehab. It should be easy to get. No, it's not. The bigger the loan, 100,000 and up is much easier to get than a little bitty loan. In fact, most of them now, there was a 50,000 minimum. There's still a few, most of them are 75, but I have most everybody, I don't see $100,000 and up. And in fact, we've got 45 minutes here. I ran some deals on paper here. I'll go over in a minute that shows you the difference in some of the big deals and actually your risk and your return, and you'll kind of be surprised. And I was too. I mean, I knew, but then once I ran it, I'm like, I'll get to that in a minute. Anyway, here's a little form I use here, kind of an intake form. And again, so we may be redundant there. Your experience questionnaire. I said, I'm going to get your name, and are you a full-time investor? Are you just starting out? Are you doing it part-time? Do you have any real estate license or appraiser's license, broker's license, anything like that? What's your number? Are you a contractor of any sort? You know, are you licensed? We don't talk about your career, not where you work, but how many houses have you purchased or rehab or sold, and how long you've been doing it? And if you have done it, if you're an experienced investor, and actually the lender sometimes will want to see the HUD statement, which is HUD statement basically is the closing statement, sometimes called a HUD one. They want to see all the numbers on that HUD one to see where you walked away with closing with a check, so they know you made a profit on that deal. So if you do have had 2 or 3 houses, yeah, then we're gonna know the street address, the city where you've done that, state and the zip, how much you bought it for, and when the sales price, when you bought it, when you sold it. Did you have to pull permits? Did you paint it? Did you do the inside out? Did you put carpet? Did you do electrical? Kind of the scope of the work, kind of what you did. And like I said, we're going to want to see 2 or 3 of those properties you've done. That kind of helps things. Like I say, my job, you think of me as like an attorney. If you've been arrested for drunk driving, you don't want to go to court for yourself. You want to come to me, I'm an attorney. I'm actually going to get up there and plead your case. I'm going to tell you a story. I'm going to find out if there's any mitigating circumstances to reduce that right there. That's the job as attorney. So that's my job. That's what I look at as my job as a broker. I'm acting as a fiduciary. I'm trying to act in your behalf, but I need to know all the facts. So when I go in front of someone, a lender on your behalf, I'm like, this guy's solid, he's done this, or this guy's just starting out, but he's got X amount of dollars, or he's got, well, I see Wendell's in here, he's got Wendell Long, and Wendell Long's a great guy, and he owns property, or he's got one of these other guys in the group that kind of guiding him along, they're joint venturing the thing to make sure he doesn't make any mistakes. So I got all the facts together. I can tell you a story and get your deal done for you there. If you're not cooperating, like I said a while ago, or you don't have anything to go on, then I'm not saying don't waste my time, but I'll try to help you, but I got to have a starting point. You got to have some information and stuff there. I'm not going to go over a whole lot of this right here. This is about 3 or 4 forms. This is a personal financial statement. Just some of the highlights are this. Want to know how much cash you got on hand, government securities, bonds, and securities, stock, your real estate, who owes a note to you. I'll buy that note for you. Don't forget. We can clear that out there. What kind of notes do your relatives owe you? Does Aunt Sally owe you some money there? What kind of personal property do you have there? Any other assets there? And then we're going to go over liabilities column, how much notes you owe to the bank, how much you owe to Aunt Sally, and how much notes you owe to others. Kind of not necessarily your house bills, but what bills you have. Do you owe Discover every month? $99 a month for Visa or whatnot. Do you have any unpaid income taxes, property taxes? Do you have any loans on your life insurance? Do you have any contracts? Whatnot. I'm just going to go all of that right there. And we're going to go kind of over your salary, your annual income stuff there, your annual expenses. Then we're going to kind of find out, it's going to go back to that top column, your cash you got in the banks and whatnot. And then we're just basically breaking down everything we had right there. So.
I have a question, Frank.
Okay.
The question is, what is the best way to get in contact with you?
That would be at 864.
Let me see if I can put it in here.
Yeah, that new fancy webcam I had, it didn't work. I could put all that in front, and I had it all set up. And Adamma can tell you it didn't want to act right, did it?
No, it didn't.
I got to go back in there and figure out what's going on with that thing.
I'm typing it in now. Y'all pardon me, I type kind of slow. Frank Caldwell. And are you using the
608.
Okay.
And you can put my email address in there.
I will.
Can I keep talking while you're doing that?
Yep.
All righty. So gather my thoughts here. I guess some of the ways to get money I was talking about earlier, we can do a portfolio loan. If you've got a bunch of commercial properties, you've got or some single family, or you got an apartment complex, and you want to lump it all together, which I don't recommend lumping it all together. If I do it in, if you got enough loans to maybe do 3 or 4 different loans, or 2 or 3. That way, if something did go bad, you wouldn't be totally wiped out there. Like I said, I recommend if you got a private lender that will loan you a little money, that may be your cheaper route, or have a joint venture partner. I know we have some people, I haven't seen them in the group since COVID, but I think his guy's Sean McKay. They're kind of help you do your IRA. They know how to do that administrative part and guide you on how to borrow that money. And of course, you have to put it back in that IRA. You can't take the profits there, is my understanding. Experience, your partners and co-signers, you can bring those on. I guess it goes back to, I've already kind of beat this horse a time or two, but what size of box do you fit in? Are we're starting out, or are we experienced lender there? So I know, where to go with you there. I've got some lenders that won't even do, of course, they're more commercial. They won't do anything under $500,000. So you're not going to do a fix and flip. Well, you might in Charlotte now. Who knows? Those prices are crazy up there. Another thing I recommend when you're looking at a piece of property. In fact, I'm gonna tell y'all a little trick how to find houses. And man, I just thought of something there. But basically, do what I do when I was doing this line of work. Go to the front of your house, take a picture of the front, all sides, all corners, back. Then go and take a street view, take pictures of the inside of the house. If you got any spots in the ceiling, whatnot, just take pictures of what you need to do. You may not have seen it to the lender, but at least you got something to reference. But if you got some pictures to send the lender and the pictures of the neighborhood, that may help the situation. Know who your contractor is. If you got one there, you're not going to do it yourself. Kind of get a rehab budget. I don't think I'll have time, and I'm not sure I have the form, but it very much helps you to have a written budget to show the lender that I'm actually taking you to, that this is what all needs to be done, and this is the estimates. That way it kind of validates the figures we're telling them there. Like I say, know who your attorney is, who your accountant is. Also, if you got a relationship with professionals like that, sometimes they know people who have money. We've always talked about Adamma there, have a realtor on your team there.
Thank you.
And let's see. So what will kill a deal? A lack of research, your due diligence. You make your money when you buy right, and you're informed. You get your profits when you sell. Your rehab budget, and we just went over that, use the right contractors and expect surprises. You might start digging out a wall and you're like, holy moly, we got some termites in here. So now we got some more money. So you always need some fun, a little room to fudge. Code violations, if they're not correctable, that could kill a deal. Need to disclose to the lenders and the partners if you can. If we need to, we will. Is there mold in there? I mean, is it just a little spot or two, or is the house eat up with it there? Can it be remediated? We may want to disclose that. Asbestos, most of these older houses probably do have asbestos, and I haven't seen it come up, but be prepared in case it did. Always do some research, be sure your house isn't in a flood zone. Goes back to that good realtor, they can pull that up and tell you if that house is in a flood zone. Is that correct?
That's correct.
You don't want to be buying in a flood zone.
We do not.
The financing, is it good financing or bad? Is it going to kill the deal? Is it going to kill the profit? I mean, if your margins are too soon, there's no need to work yourself to death to lose money. You're not making any money there. You can sit at home and drink coffee and watch Netflix and don't have all those headaches there. So, you know, your cost is it versus the cash, your IRA, like there's funds or costs for using that IRA, administrative costs. I always say invest up front, analyze, appraise, and inspect, pull your comps. Should you walk away or stay? What kind of profit margin? Invest in a good analyzer program, and don't pay $10,000 for some guru that tells you he's got this and got that and proprietary stuff. You could either get it for free, get some recommendations for people that are doing it. I actually have a program that's not for analyzing, but I recommend for people, if you're looking for property, I like PropStream. And I know this month, and I've already been looking at it online, I call the REI Black Book. Especially if you're doing some wholesaling and you're looking for deals, it looks like it's a good one, but I'm going to wait to the meeting of this month because I think they might throw some bones in there, some free.
Yeah.
I'm going to wait and see what they have there. So at the end of the deal or no deal, so your expenses, insurance cancellation fees. I mean, you're going to have to pay that insurance up front. Prepayment fees. Especially on a long-term loan, maybe not on some hard money. I mean, you're going to use it 3 or 6 months, but if you're getting a long-term loan and you're going to sell that property in 5 years, I would pay a higher interest rate versus a cheaper interest rate. You got a prepayment penalty. So it may be a 5, 4, 3, 2, 1, which means the first year, if you sold that house, you would have to pay a 5% penalty of that loan amount. So if you've got $100,000 people project and you have to pay $5,000, I mean, and you're only making 20,000 profit, you've just eaten 25% of your money up just on a prepayment penalty. So that's why I say going in, I like to ask people, what's your exit strategy? What are you going to do? That way we know which way to go with the financing so it fits the deal. Don't make the deal fit the financing, make the financing fit the deal. So you have the proper product. Like I say,
I have a question, Frank.
Okay.
Sorry. Have you heard of Area Pulse?
No, I haven't.
Okay.
I'm gonna write that one down. Do we have anybody in the room that's wanting to get into wholesaling? Because I was gonna say, if you do,
Yes, I do.
well, you go to YouTube and look at Flip with Rick.
Look at what now?
Flip with Rick
Okay.
and Max Maxwell. Those two
Okay.
there, you can learn everything you need to do for free.
Our Maxwell.
Yeah, Max Maxwell. He's not too far up the road. He's up there in Winston-Salem, North Carolina.
Okay.
Yeah, hey, don't you be wholesaling down here around Greenville and Greer now.
Okay,
I'm just picking on you.
okay.
Yeah. So yeah, I try to bring value there. If there's any gurus on here, I'll get beat up at the next meeting up there. So going back to my little notes here, I say just have your facts together, help your lender package your deal for you the right way. Make good offers, have built-in margins for your overages and profit and surprises. I think I've already hit this right here, but just have a little knowledge and experience helps. If not, there, or find somebody that does, or talk to somebody that does there. Have a little patience. Things take longer than you think they will sometimes, and just getting a loan and also getting the property sold and getting contractors out there and figure if you're going to have a profit or loss, and whether you need to pass or buy, because not every deal is a deal. And let's see, I've got 30 minutes here. That puts it about right. Now I can go to notes number 2 in my little book right here. Okay, I ran some numbers here this week on 2 different deals. And let me get my thoughts together right here. I think I need to go back a page here. I was going to talk about getting on the commercial side here on cap rates and net operating income and return on investment. I don't think we'll make it there tonight. And we're not going to get into DSCR, which is debt service coverage ratio. I know Wendell knows what that is. That's a commercial thing right there. I will kind of back up on this right here. There's lender types, there's banks and credit unions. Consider a home equity line of credit. You probably get money now for about 3%, give or take there. So if you've got a little equity in your house, that give you a little starting point to get some funds. Always got your IRA, your private lenders, your REIA members there. I talked about finding your JV or money partner. I'm down the line in the food chain basically, but if you have to come to me, I'm a broker. I have multiple lenders, a lot of different contacts. Actually have a couple of software programs that sometimes will plug me into an insurance company. That's on a bigger deal, but we're a hedge fund, but I can basically shoot or put it in the software and it'll give me like 6 to 8 to 10 lenders who will do the terms that you want or do the type of loan you want there. So how the broker gets paid. I talked about this earlier, but I go back. Basically, I usually charge 1% of the loan amount with $1,000 minimum. I do have some lenders who will pay me on the back end for a little bump in the interest rate. That's called a yield spread premium. And I will disclose, if I do that, I will disclose it to you. I don't hide anything. We talked about the business loan consultant right off the bat there about how they will get you all these credit cards and then you own 10% of what they've gotten for you there. The different loan types are the fix and flip loans where you're basically buying a house and fixing it up and retailing it there. Hard money loans, which are used to facilitate the fix and flip. A straight up just purchase loan where you're going to hold the property. That could be for a multifamily, a rental, a single family residential rental. Self-storage, if you're investing in self-storage, yeah, I do work with probably the biggest lender in the United States, and they're right here in North Carolina. They do SBA loans. Usually about 10% down is all you have to come up with. I don't charge any fees for that. I don't think they charge any lender fees. It's all paid by the government. We're all reimbursed back down the food chain. Don't hold me to their points, but I know I don't charge any. I'm not allowed to. I'm taken care of by the bank. You got refi loans, your portfolio loans, which like I say, you can put all your properties under one umbrella. Refi cash out, which basically is part of the portfolio loan there, or it could be a single property. You got a lot of equity in it and you want to do another project, we can do that. We talked about the bridge loan is basically is usually a bigger type property where you've bought that great big industrial building or that big skyscraper or something. It's usually a bigger loan there where you got to hurry up and get your money before your big money comes in or your permanent loan. So that's just it's basically a hard money loan, but it's a commercial purpose there. Hard money fees come in there when you're getting a hard money loan. Points, interest, your closing cost. I think I talked about the draw inspection costs sometimes. Some lenders do after like a certain period of time, maybe 3 months, 6 months, they may charge you an extension fee for that. I call it junk fees. They're not necessarily junk fees, but credit reports, overnight fees, doc fees, an application fee. I try not to go with a lender that charges an application fee. Sometimes there's an underwriting fee, a file fee for that right there. There's a lot of fees in the hard money lending, but if you're using it to make money, it's a tool, just like a hammer. If you take that hammer and drive a nail, that's a good thing. If you take that hammer and hit your thumb, that's not a good thing.
That's right.
So hard money is just proper. It's just a tool. You got to use it properly and know how to use it, so it can be your friend or it can be your enemy.
I have a question.
All right.
With the USDA commercial loans, do you need a feasibility study done, or do you help the client do a feasibility study?
I haven't done a USDA loan like that. I'm not going to address that and tell you something wrong.
Okay.
If you have a specific piece of property that you're at that phase right now, you call me and we will figure out what we need to do or where you're at. I will try to help you or try to send you to somewhere where I know they will help you.
Okay. Thank you.
Yep. So I know you kind of just follow along there. I'm sorry I don't have any slides here. I kind of did 2 deals there, and I'll show you the difference in a big deal and a little deal there. And we're talking about wholesale in there and fix and flip. So maybe these numbers will make sense. So say you're going to buy a house, it's $150,000. So we're going to do the standard 70% of the 150, which makes $105,000 in the house. So we figure we have a $30,000 rehab. So we're going to take that out. So now we're going to offer $75,000 for the house. So I'm saying that we're going to take $105,000 we're giving for the house, get an 80% loan, which we're going to borrow at $84,000. And then about 80% of the rehab is going to put us at $24,000. So we're going to have a loan for $106,000. So the first cost in that's going to be 4 points. That's $4,240. You're going to have a $2,000 closing cost. That's just an estimate there. And at $106,000 at 12%, the interest is $1,060 a month. So if we carry that for 6 months, we're going to have $6,360 in interest. So they're going to have to make you have a reserve of that much, $6,360. But remember, we're talking about loan cost. And I've got 3 draws in there, $750. So the cost of your money, and there may be other costs, this is going to be close. So on the $150,000 house, you're going to have $11,350 cost of your money in your closing costs. So if you sell that house for $150,000, you sell it with a realtor, they're going to get 6%, I'm sorry, which is going to be $9,000. So now your HUD is going to have $141,000. And I got 2% closing costs. I always put 2%. Now, Adamma will probably tell you that's usually pretty close. So that's $3,000. So now your HUD is down to $138,000. Then your money has cost you $11,350. So that's $126,650 net to you on the HUD so far. So you've purchased this house for 75.
Mhm.
You've rehabbed it for 30.
Mhm.
And anyways, you borrowed money and everything, you've netted out 126. That leaves you a profit of $21,650. Supposing you don't have any surprises on the rehab, you don't run over, or you don't run over on your 6 months. So that's about the best case scenario if you've got your numbers together. You get in there and there's termites, or you got a septic tank out there, you got somewhere this year runs $3,000 or $4,000 more, then you could easily be down to $15,000, or you could even lose money.
I have a question, Frank.
Uh-huh.
Uh, on your uh fix and flips, do you so the acquisition of the property, you're saying that you finance about 80%. Do you have any 100% financing on the rehab?
Yes.
Okay.
Yeah, there are some ones, but I'm saying 80 in there, and it may be
Mhm.
70 because I don't know. Some people may have done a bunch of deals, and some people may be just getting started. So they're not going, the person that's done 3 or 4 or 5 deals may get the 100%, whereas the one that's just starting, and they may get the 100% on the rehab. But I always say, I'm just saying, expect the worst and hope for the best.
Okay.
That makes sense to you.
Mhm.
Like I say, you come to me and we get down to the nitty gritty, and then I'll have a conversation with a lender or two, and then we'll know better. So I'm just kind of going in general terms.
Okay.
So this other deal I've ran, and that's why I say I like bigger numbers, and lenders do too. Say you got a $400,000 house, which isn't too hard to find up there in Charlotte, I don't think. So you go back to offering 70% again of the ARV, which puts you at 280. You say your rehab's at 50. Or so you've backed the 50 out. So you agree to $230,000 purchase price. So again, we're going with the same 80% of the purchase is 224. We're going to get about 80% of the rehab, which is 40. So we're going to get a loan for 264. So we'll have 10,560 in points, 4,000 in closing, and that's just a generalization. It may be probably less, but gonna have a $750 draw. Let's see, I got a $2,650 fee. I can't remember. When I got your money here, it's $17,950 for 6 months. Yeah, that's your interest. You have $2,640 a month for 6 months. It's $15,840. So you're gonna have to have $15,840 reserves in the bank. So you sell that house for $400,000, just like we hoped we would. So we got our 6% realtor fee. So we got $24,000 for your realtor, 4,000 in your closing. So now that puts us at 372. 17,950 on the money puts us at 358,050. You back out your purchase price of 230, which puts us at 128,050. Rehabbed at 50. So now we have cleared $78,050. So you see why the lenders like the bigger loans there. If you have a $10,000 boo-boo there, or even a 20, you still got a $50,000 or $60,000 profit. Whereas if you be doing that $150,000 and you have a boo-boo, you've lost money. So that's why lenders like the bigger deals there. There's more room for an error in there or a miscalculation. Or say the house only brings 390. That's still plenty enough margin to eat that $10,000 up versus where it's at $150,000 and something happens in the neighborhood over there, or there's a environmental issue, or 10 nights in a row there was a gang related shooting over there, and now that neighborhood's not desirable. You're going to have to eat that difference. Or when you sell, or say I'm going to sell the house, you're going to have to come to the closing with money out of your pocket. Versus if you're sticking to the upper end and the higher end houses, you got they're more stable, and you've got more margin for error there. Does that make sense to you there?
Yes.
So I've almost ate up my 2 hours here. So I will talk a little bit about cap rates. If there's any other questions, I'll take a breather, and anybody has a question. I see someone up there says iPhone. I don't know if you've got an invite from anybody or anybody who can, but if you can get an invite and get in a thing called Clubhouse, it is nonstop talking about real estate in there, wholesaling, realtor agents. I mean, I'm just about addicted to it. It's just about as good as YouTube, and you can make some good connections in there. So if you've got that iPhone up there, I'd definitely figure out how to get in Clubhouse. So no questions.
Oh, you've been pretty thorough.
All righty, we'll touch on some more stuff here for the next 15 or 18 minutes, Sam.
I think we lost your picture.
Did you?
Yep.
Uh-oh, let's see what happened here. Now we're back.
There you go.
Y'all didn't want to look at me all that much anyhow. You see that backdrop I got back there in that blue light? I was trying to be all fancy with that new camera, but it didn't want to cooperate there. So we talked about capitalization rates a while ago. It's called cap rates. That goes more into the commercial properties. Basically, a cap rate is a net operating income. So that's basically, if you're taking in $10,000 rent, you got $4,000 expenses and taxes and insurance and blah, blah, you've got $6,000 net operating income. So you take the net operating income and divide it by the value of the property. That will give you the cap rate. And so the cap rate basically calculates how long it'll take to recover your investment, or how long it'll take to pay for the property. And a lower cap rate may imply a longer time to get your money back. And a higher cap rate is a faster return on your capital. But sometimes a higher cap rate may not be good, because it may go back to like the trailer park I was talking about, where I was afraid to go into, paid 26% cap rate when it was sold. But it's management intensive. There's all kind of problems down there. That's for like a small operator that doesn't mind being hands-on. Some of these Dollar General stores you may see around, some of these retail stores may be paying only 6% cap rate, or maybe 4%. You say, well, that's not good. 4% cap rate means I had to pay $25 to get $1 worth of income every year. Well, what if I'm getting $100,000 a year and I've got a 4% cap rate? I paid $2.5 million for that property. I paid 25 times that. But what if I add extra $10,000 into the net operating income of that property? So now it's worth 25 times that income. So I've increased the value of that property by $250,000. Versus if I had that trailer park and did the same thing, then it would only be like $4,000. I'd increased it. Does that make sense to you?
Say that again.
Okay. If I have a lower cap rate, which means giving more money for the property, I've paid more for the income than I would have if I had a higher cap rate. But if I can increase the income of that lower cap rate property, I'm buying it at a higher multiple, then the increase in the property value is a much higher multiple. I know it's kind of, it takes everybody a while to get it, but basically that's usually your commercial property. But yeah, sometimes a lower cap rate is not a bad thing, especially if you're trying to go in and turn a property around. Say you've got a 10% cap rate, you've got $100,000 income, then you're giving $1 million for that property. If it's a 8 cap rate, means you give 12.5 times, you give $1.25 million. But if you increase that income by $10,000 this year, you've increased it at $100,000 at the 10 cap rate, the value, but at the 8 cap rate, which means you gave more effectively for the property, but now you've increased the value of the property $125,000. You follow what I'm saying there?
Mom, I just let a couple of investors in. I think this is would be good with a slide.
Yeah, I know it would be, and I'll get a slide. If you want to have another session, I can dig deep. And like I said, I knew I'd get over some folks' head right there. I'm just trying to fill out some time right here. And of course, the net operating income again goes to basically your annual income minus the expenses and the management fees and everything goes with it there. And I don't want to get over anybody's head right there. And
there's I see Richard and I see some other people, Melissa and Wendell and some other people that are on there. So no, we have a mixed group. So
yep.
it is not a waste of time.
No, I'm not wanting to waste time. I was wanting to just kind of let them get their mind working there, maybe dig in a little bit there. But that's about all I have. I hope I've.
I have a question.
Okay.
Is there a minimum FICO score that you work with?
If you're up there, I'm going to say no. But if you're down there, sub 600, you might start having some problems there. Obviously, like I said, it goes back to that mitigating factor. If you're going to borrow just 65 or 70% of a property, the score is not going to matter. Over here in this box, and you're wanting that 80 or 90% of the purchase and 100% of the rehab, then it's going to be a different scenario. Does that answer your question there?
Yes.
It goes back to what I said a while ago, the perceived risk versus the reward.
Yeah.
In other words, they say, hey, we're only in this property for 70% total or 65% total. And it's X amount of dollars, and we have to take this property back. There's enough margin in there to where we could maybe not lose money. Versus, if you're up there and you pretty well leveraged out to 80 or 85 or 90 or 95%, and they have to take the property back, then they're definitely going to lose. What was that question there? I saw it pop up.
What is the minimum requirement that you need to get financing for a first-time flip deal?
Goes back to you need some reserves in there to cover your 3 to 6 months interest rate you're going to have, plus your portion of the rehab budget, and you need some money to cover your closing costs. And usually your minimum loan, it used to be 50. There's still some $50,000 loans available. Most everybody's 75, and I have seen some lenders go into 100,000 because I guess I can't speak for them, but I would imagine the real estate markets are hot in places and values are going up, but you're getting those less desirable houses when you're getting in there around 50 and 75,000. So yeah, if you get in touch with me,
I've got to go get my cord right quick so we don't lose y'all. Go ahead.
On the commercial, I saw a question there. I think on commercial construction, I think I do have some lenders there. Like I say, the best thing to do is get with me. And if you've got a specific deal, you've purchased the land, you own the land free and clear, and you have a budget there, we can look at it. Let me get in the chat here and see what question we had there. I don't know how difficult it would be not to side skirt your question there. It goes back to what I said a while ago. If you own other properties there, and I do have some builders who will do some building construction. Again, just call me there, and we will go from there. If I can help you, I will. If not, I'll research and tell you where to go.
Okay. So did you see both questions?
Yeah, do I land on new construction on multifamily? I would probably have to pull in somebody that's maybe has a different contact from me, but like I said, I have no problem trying to help you or trying to research and figure out what we got going on. And if I can't do it, and it goes back to, like I said, I have that program I can plug in. And a lot of times I put all the numbers in there. I just have to have a conversation. You give me all the numbers and tell me what your net worth is and what your credit score is, and kind of are you doing it solo or do you have other partners in the property? I have a pretty long a form I fill out, and then I kind of see what kind of lender match I get with that.
Mhm.
Sometimes I'm surprised what I can do, and sometimes I'm surprised what I can't do. I say everybody's different. Every situation.
Everybody in the situation is different. That's right. And what's the level of difficulty for getting funded to build a 4-family home?
Yeah, I already hit on that one.
Okay.
I told them I do have some builder contacts or builder financing contacts. My job is like I'm like a private investigator. You come with me with what you've got, and I'll build it up from there. I'll find out what I can.
Okay.
And I won't lie to anybody or BS you, for lack of a better term. I mean, if I can do it or have the contact, or can't, or if I can find one, I'll let you know. If I can't, I'll tell you, try this person, or let's see what we can do over here.
Okay. Excellent. And I don't have iPhone 2. I don't have your name or your contact information. If you want to send me a individual, if you send the information to me individually in the chat, I can make sure that we get you on our list, and make sure that I get Frank your information if you'd like. Also, Dodie, I don't have your full name, so I know.
I just put my email in there again.
Yeah, good. Excellent.
In fact, I'll stick both of my phone numbers in there.
Yeah, there we go. Did I? Oh, here we got a new message here. There we go. Did I ask you the question if you lend on new construction deals on multifamily?
Yes.
And or single family?
Yeah, you were going. I do know I do have a company who will do construction deals on single family. I know that for sure. If you're doing as long as you're doing it, as a spec builder or to resell. If you're doing it for yourself, then I'll have to find you a regular residential, regular mortgage. Anything that is not owner occupied, non-owner occupied,
Right.
or the purpose of is not. If it's owner occupied or the purpose is to be, then I'm not. I do have an NMLS number, but I don't have it parked anywhere, and it's inactive, and I don't think I'll activate it or park it anywhere. That's just business that has changed so much, and I do a little lead generating, and I actually talk to mortgage companies, guys, like they've even scared to buy a lead. They can't even hardly give you a trinket anymore. You can't give them one. It's just so.
Yeah.
After the meltdown and the Dodd-Frank and the TRID laws and all that other stuff that came about, it's just a headache if you don't stay right on top of it. So
it is. It is. It is.
Yep. And then they have that thing called FACTA, and they can't even hardly call you and solicit business anymore with the do not call list. I mean, it's just they are.
Yeah. Yeah,
You know, I understand that they did the wire loans as people that back in the day, stated assets, stated income, you know, if you were breathing and you could sign a paper, you could get a loan, and then they had the meltdown.
absolutely.
So then the government went overboard with the Dodd-Frank and the Truth in Lending Act. It just,
Mhm.
they swung too far to the right.
They did. Oh, Mr. Presley.
So I hope this has been informative to everybody.
It really has, my dear. I think you've done an excellent job. And I'm writing a contact down for you.
Yeah, the one gentleman that you sent me, he had actually emailed me this morning, but this has been a crazy day for me. And then to not get off the subject, but I kind of watch out for my neighbors across from me. They're elderly, and the lady just died.
Oh.
Anyway, a neighbor came to me and said that the husband had told him he was going to commit suicide. So I called his daughter, and so then she called me, and then so she told him that which neighbor it was. So then the guy called, and he wasn't mad at me. And he said, no, that was not true. So we had a discussion time or two, and I told him, you know, I love them just like they were my parents, and if he needed a friend. So yeah, that drama caught me this afternoon. I'm like, you never know.
Mm.
Yeah, and then I've got some other things going on, and then this note deal. So today's been a little crazy one there. Yeah, anybody that's got a note for sale or know somebody else wanting some money, refer them. Please refer me.
Yes. Yes.
I went to bat on this note deal. They won. There's $15,000 difference between the two quotes I got. So I guess you figure out which one I went with.
Yeah. Let's see. Yeah.
Yep, that's another thing. I don't have my form here, but I'd actually have people who buy notes on mobile homes with land, and the person that's talking about doing the land, I do know that there's some people that know the note business good and could generate you a note on that land, and you could season that note for a while and turn around and sell it. But I'm not on that end of the note business. I don't know how to tell you to make that work, but sometimes people do go that avenue. They will actually use a note to pull some money out, but that's not totally down. When it gets to that side of it, that's not my forte.
Yeah. I'm just making a few notes here from the notes. Do you have any construction workers or plumbers that work in Albemarle?
Not me. Is Wendell still in here?
I'm writing the question down so I can ask him.
Yeah, Wendell's over there in Mint Hill, so he's not too far from Albemarle.
Yeah.
You know, I was in the trucking business for many years, and then I drove here and there, but I was driving part-time for this company, and I went right there by the railroad tracks by the auto auction on Westinghouse Boulevard, if you know where that is. I don't know if that was BASF, but anyway, they just about every day I'd go up there for this company, and I would go to Albemarle. Anyway, I remember I would go over through Mint Hill on the back roads and hit 52, I believe it was. So I'm familiar with Albemarle over there, but as far as contractors up there, I don't know. And I tell you what, I'll say this from personal experience. When you're hunting a contractor, be sure you vet them and don't give them any money up front.
Mm-hmm.
If you do, you'll never see them again.
Mm-hmm. Mm-hmm. Well, we just appreciate you so much, Frank.
Yep, thanks.
You are a
a
wealth of knowledge, and you have shown us that you can get it, you can help when no one else can. I guess I should not say that in the main meeting, but this is our home meeting, so.
Yeah, I think I made one mad last time in the meeting, was something he said up there about, you know, he could do something versus a lender, and I didn't mean it that way, but you know, that's the way it was taken, I guess. But
Mm.
one thing I want to say before we leave, you asked me a while ago, I don't know if anybody here has a retail establishment or you take credit cards, but I do have some good contacts there. And the biggest thing that's going on now is the trend is doing what's called a cash discounting or surcharge, where basically you have very little cost to you, and you charge the consumer 4% for the privilege using a credit card, and that way you don't get those fees. And also, I'm set up with a company. It doesn't matter what, if you got a professional practice or a car repair shop or whatever, and they come in and like, we can't afford to pay this, whatever, we want to buy a washing machine. It's called consumer finance. I have a platform where you can get it, and it costs 3.9%, but basically they can apply right there at your store, your establishment there, and probably get 5 or 6 different lenders to give them a loan right quick so they can get their transaction done with you.
Fantastic. Yeah, we have two new members that have a car used parts dealership, and they also have they sell cars, used cars, and they wanted to be here tonight, and I will definitely pass this along to them. Absolutely.
Now, how do I say her name there? I appreciate you letting me be here, but is that Inez or Inez?
Yanez.
Yeah, you're welcome. I'm honored to be here.
Absolutely, absolutely. It's a pleasure, and it really is an honor to be able to, because I'm a realtor, and my passion is, as a realtor, of course, finding the right property for you, but as an investor or as a home buyer, and I want to show you the money. So for Frank to come on, and that's what we talk about just about every month, show us the money. And Frank has done an excellent job for coming on and showing us his money.
Yep. If you were there last month, and well,
yep.
If you want to go around me, you can try, but you know, it'll cost you about the same if you use me. But you know, you see that lending one up there streaming across. I'm actually a broker with lending one. Rehab Cash Now is another one that I use. Lima one, all the big boys you see. Spring Hill Capital, I use those guys a lot. Apex Mortgage, Velocity Mortgage, a lot of ones you never heard of there. Like I say, you can go direct to them if you want to. I mean, you know, I'm not going to hide anything, but it's going to cost you the same thing basically. So, you know, you show me a little love there, and I'll help you out there. Like I said, I try to bring value to the thing, and I work a lot for free and have a lot of conversations with people. I never get anything out of it, and hopefully down the road they'll do something or refer me. So, you know, I'm not an attorney. I'm not going to charge you $300 an hour to speak. You know, I'm not going to speak to you for 4 hours tomorrow or the next day or the next day, but we need to have a conversation for 30 minutes or 40 minutes or an hour. I'm glad to do it.
Yes.
Or set a time up where we can.
Yes.
I like to see people succeed. And like I say, I gave out those, I'll put that right here. Now I'm going to put some resources right here for YouTube right here.
Excellent. Excellent. And as when you contact Frank, be sure to let him know that you heard his class or his education through our Concord subgroup meeting. Giving it a plug. It's an excellent thing to join the Metrolina rehab organization.
Yep. Yep, and you see us vendors up there, we have to pay a good bit more than a regular member to be a vendor member up there, so.
Yes. Absolutely.
And one thing, I'm a member of several REIAs, and I can honestly say, I guess I haven't found a bad apple up there yet. I mean, I've had dealings with one. I think he was kind of ran out of there. I think somebody alluded to him the other day, but some of the other ones I'm in, there's some in there that they'll see a rookie coming and they'll try to sell them a bad deal. And all I see is professionalism up there. Like I say,
Yes.
this one fella was part of the Metrolina. Not to disparage anybody, I know. I think he ran off with some materials and some money, and he lied to me about a loan. He told me he didn't get a loan, but the lender sent me a check. So if they sent me a check, they didn't do it for nothing.
Yeah, that's, and that's the thing. That's the beauty of Metrolina, that there's some accountability. Now somebody might jack one of us, but they're not gonna jack the rest of us, because we're gonna
No.
let everybody else know
Yeah,
this person jacked us. I got jacked when I first got in too. I haven't seen that person since. So yeah, there's great accountability, and that's why, I love real estate. I love being a realtor. I love finding home buyer money and investment money for our clients, finding off-market properties. And so that's just an added value that I feel is necessary to help my clients find the money. So you have shown us your money tonight, Frank, and we appreciate it.
I was glad to be here. And like I said, I'm not fancy, I'm not polished, and I can't stand up and jump around and do all that stuff there. But I do have some knowledge, I think, and try to bring some value. And in fact, it's funny you said I got thrown out of Fortune Builders last week. They had a presentation, and this guy was, they asked what you did, and I told what I did. So at the end, after the pitch, the guy asked me for my business card. The man come up there and told me, I'm kind of laughing about it still. He said, if you want to speak to people, said next time get your own ballroom. I said, well, he asked for my business card, so I gave him one. But
Yeah.
That's what I go back to. You don't have to go pay somebody, like, not them in particular, anybody. You don't have to go pay somebody $10,000 to show you this business. You can. It's all
Right.
on YouTube and right
So
there.
we will help each other. We will.
And if I
Absolutely.
can help you, I've already said, if I can help you, I'll help you.
Yeah. I believe you, Frank, because you've helped us already tonight. So
I'm glad I did.
So we're going to respect everybody's time. I know we went over a little bit. We started a little bit after the hour to give everybody a chance to get in, but we appreciate you.
Yep.
And we, at our Concord subgroup, we meet the second Monday of every month. So tomorrow, if anyone is interested in the notes, which again is a promise to pay, our Randy Wall teaches nothing but notes, and we're meeting tomorrow at Jonathan's restaurant. Jonathan's restaurant in Matthews at 6:30. So we hope to see you there. And everybody have a safe night. Take care, be healthy, and we appreciate you.
Thanks. Y'all have a good night.
Good night. Bye-bye.
Thank you.